Welcome. Today, we're diving into the fascinating world of stocks. Now, before you roll your eyes and think, oh, not another boring finance lecture, let me assure you, this is going to be fun and straightforward. Think of this as your friendly guide to understanding stocks, minus the jargon and confusion. So, what exactly are stocks? At their core, stocks represent ownership in a company. When you buy a stock, you're purchasing a tiny piece of that company. Imagine if your favorite pizza place decided to sell shares. If you bought a stock in that pizza place, you'd own a small slice of it, pun intended. And just like how you'd want your pizza place to thrive so you can enjoy delicious slices, you want the companies you invest in to do well too. Now let's break this down a bit more. Companies issue stocks to raise money for various reasons. Maybe they want to expand, develop new products, or pay off debt. When you invest in stocks, you're essentially helping them achieve their goals while hoping to make a profit in return. It's a win-win, right? Well, sometimes, but we'll get to that later. Stocks come in two main flavors: common stocks and preferred stocks. Common stocks are the ones most people think of. They give you voting rights in the company, which means you can have a say in some of the big decisions, like who gets to sit on the board of directors. Preferred stocks, on the other hand, don't usually come with voting rights, but they do have a higher claim on assets and dividends. Think of preferred stocks as the VIP section of the stock world. You might not get to vote on the music playlist, but you're guaranteed a comfy seat and a drink. Now, let's talk about dividends. Dividends are like a thank you note from the company for being a loyal shareholder. When a company makes a profit, it can choose to reinvest that money back into the business or share it with its shareholders. If it decides to share, you get a little cash in your pocket. Not every company pays dividends, though. Some prefer to reinvest their profits to grow even bigger. It's like choosing between saving for a new car or treating yourself to a nice dinner. Both options have their merits. You might be wondering, how do I actually buy stocks? Great question. The process is simpler than you might think. You'll need a brokerage account, which is like a bank account, but for buying and selling stocks. There are many online brokerages that make it easy to get started, often with user-friendly apps that let you trade stocks right from your phone. Just remember to do your research and choose a brokerage that fits your needs. Some have lower fees, while others offer more educational resources. Once you have your brokerage account set up, you can start buying stocks. But hold on a second. Before you dive in, it's crucial to do your homework. Research the companies you're interested in. Look at their financial health, growth potential, and industry trends. You wouldn't buy a car without checking its history, right? The same goes for stocks. Now, let's talk about something that can be a bit intimidating: the stock market itself. The stock market is like a giant marketplace where stocks are bought and sold. It's where all the action happens. You might have heard of major stock exchanges like the New York Stock Exchange, NYSE, or the NASDAQ. These exchanges provide a platform for buyers and sellers to connect. Prices fluctuate based on supply and demand, news, and even investor sentiment. It can feel like a roller coaster ride, but that's part of the excitement. One of the most important concepts to grasp is market volatility. Stocks can go up and down in value, sometimes dramatically. This can be nerve-wracking, especially for new investors. But here's the thing: short-term fluctuations are normal. If you're investing for the long haul, say for retirement or a future goal, try not to let daily price changes stress you out. Think of it like planting a tree. It takes time to grow, and you can't rush it. Patience is key. Now, let's touch on risk. Investing in stocks isn't without its risks. The value of your investments can go down, and there's always a chance you could lose money. But here's the silver lining. With higher risk often comes the potential for higher rewards. Historically, the stock market has provided better returns than other investment options like savings accounts or bonds over the long term. The key is to find a balance that works for you. Diversification is a great strategy here. By spreading your investments across different sectors or asset classes, you can reduce risk while still aiming for growth. Speaking of growth, let's talk about the power of compounding. When you reinvest your dividends and let your investments grow over time, you're harnessing the magic of compounding. It's like a snowball rolling down a hill, gathering more snow as it goes. The longer you stay invested, the more your money can grow. This is why starting early can make a significant difference in your investment journey. As you embark on your stock investing adventure, remember that it's okay to start small. You don't need to be a millionaire to begin investing. Many brokerages allow you to buy fractional shares, meaning you can invest in a portion of a stock rather than the whole thing. This opens up opportunities to invest in high-priced stocks without breaking the bank. In conclusion, stocks are a powerful tool for building wealth and achieving your financial goals. They represent ownership in companies, come in different types, and can provide dividends. The stock market might seem daunting, but with a little research and a patient mindset, you can navigate it successfully. Remember to diversify, stay informed, and embrace the journey. Investing is not just about numbers, it's about your future and the dreams you want to achieve. So grab your metaphorical backpack and let's hit the trail together into the world of stocks.